Hey, what's going on, guys? I hope you're all doing well. In today's video, I want to cover more about Dividend Aristocrats and more specifically about an ETF that's going to track the Dividend Aristocrats for you. Let's get right to the video. If you guys are new here to the channel and you don't really know what it's about, I talk about all things investing with my tips, tricks, and insight into the stock market. So if that's something that interests you, then make sure you hit that subscribe button and turn on that bell notification to be alerted when new videos come out. I'm posting a ton of different content, so you're definitely not going to want to miss it. And speaking of content that you're not going to want to miss, my last video, I actually talked more about Dividend Aristocrats in general, just what they are, where you can find the best resources to do some research on it. So if you haven't checked out that video, make sure that you put that on your watch list. Now, it's very important to establish some basic knowledge about what Dividend Aristocrats are. First off, if you're unfamiliar with it, essentially what Dividend Aristocrats are companies within the S&P 500 that have been able to increase their dividend payments for the past 25 plus consecutive years. So without lowering their payments at all, they've been able to continually increase those payment amounts, which is just really solid when you're looking at these companies. It means that their financials are straight and their just growth is doing relatively well, and they're just a safer pick for a lot of different people. So that's one of the criterias. They have to be part of the S&P 500 and they need to meet certain liquidity ratios. So all of those are very important to be considered a part of the Dividend Aristocrat family. So one thing that's definitely important to keep in mind when you're looking at Dividend Aristocrats is comparing it to the S&P 500, because they all fall within the S&P 500, and basically what you want to do is outperform the S&P 500. So what I'm going to do for you is display a little chart that talks about when it's overperformed or when it's underperformed compared to the S&P 500. So you can see that this chart right here has been filled in since 1991 to 2018. So all the green in this chart is going to be when the Dividend Aristocrats overperformed the S&P 500. All the red is underperformed. So green is when they did better than, and the red is when they did worse. So looking at this, it's really interesting. You can see some really great numbers here, especially around the year 2000, 2001, 2002, when it was 19.2% greater, 22.7% greater, and 12.2% greater than the S&P 500. So definitely in times of recessions, this is a great option as well. You can see in 2008, it went up 15.1%. I'm sorry, it still lost value over time, but essentially it lost less value than what it was compared to the S&P 500. So definitely something to keep in mind if you're looking for investments during a recession. And then another chart that I want to show you guys is going to be one about the total return of $10,000 investment between January 1st, 1991 and December 31st of 2016. So if you invested $10,000 back in 1991, if you just invested in the S&P 500, you would have finished with $116,727. Now that's awesome just off of a $10,000 investment anyways, but if you had invested that money elsewhere, say in the Dividend Aristocrat tracing ETFs, basically you would have ended with $191,463. Definitely something to keep in mind when you're investing in companies like this, when you're investing in ETFs in general and trying to figure out what is the best option for you. That is one of the main reasons why I really love the Dividend Aristocrat family. So right now I am revealing the ETF that I think is the best Dividend Aristocrat tracing ETF. Now that's ProShares S&P 500 Dividend Aristocrats ETF, or NOBL, NOBL. So this is a very solid one. You can see that it's priced at $72.09. Now, what's interesting about this is that year-to-date return is 20.79%. So had you invested in this back in January, you would be sitting really, really nice right now with those returns. It does have a dividend payment, and the expense ratio is somewhat high relative to other types of ETFs, and that's mainly because all of this is reviewed pretty frequently. So every year, basically, a company might drop out of it or a company might be added to it, and it's pretty actively managed. So there is a little bit higher of an expense to this category, but nonetheless, you're going to be getting some solid returns from it anyway. So it's not one that you have to be too particularly worried about. You're going to get solid returns. These are all obviously solid companies, especially if they've been able to pay an increasing dividend over the past 25 years. One of the best parts about this ETF is that it just has been so steady over the years. So if you look at, let's just start with 1 month. So obviously we're in the green for 1 month, we're in the green for 6 months, year to date we're killing it, 1 year also killing it, 5 years doing super well, and then all time also we are basically just chugging along with this. So this is a really good ETF to be considering adding to your portfolio. It's not as expensive as a lot of the other ones out there too. I mean, $72 is pretty reasonable for ETFs. And what you're buying into here is basically just that diversity. So I know I talk a lot about diversity in your portfolios. I've mentioned it a few times in a couple different videos that I have, but diversifying is so important when it comes to your investing so you don't get caught with all of your eggs in one basket. The last thing you want to do is have a lot of your investments in one company and have them crash, or one ETF, and that ETF ends up doing poorly for the year. You want to make sure that you're diversifying. And by diversifying within those Dividend Aristocrat companies, you're doing pretty well because those are already solid companies. And although one might not be doing great at one time, I'm sure that most of the other companies in the Dividend Aristocrat family aren't going to be having those same strugglings. Unless we're hitting a recession type economy where everything's going down. But historically, like I said, this outpaces the S&P 500. So in a recession, if the S&P 500 is to drop, then theoretically what's happened in the past is the Dividend Aristocrats within the S&P 500, they still drop, but they're dropping at less of a pace than they do comparatively to the S&P 500 as a whole. So for example, back in 2008, when pretty much all stocks across the board were losing value because of the huge crisis going on, the S&P 500 had a 15% worse return than had you invested in the S&P 500 Dividend Aristocrats. So that's pretty crazy right there, an entire 15% if you just went with these more stable companies. So that's something to keep in mind, especially with the economy, you know, and the future and the uncertainty of where we're headed. If you guys are wondering what companies are currently in the Dividend Aristocrat family, you can head over to suredividend.com, or you could just Google Dividend Aristocrats Sure Dividend, and then basically you'll get to this website right here, and this talks about the 57 Dividend Aristocrats that are in the market right now. It is subject to change, but this website will update if that does happen. Now you can see I sorted it here by dividend yield. It's going to give you all of the Dividend Aristocrats here. You can see there's page 6. Basically, you can get this emailed to you in a spreadsheet as well, so if you want to look at it in Excel and break it down that way. But these are all companies that if you follow my Robinhood challenge, and if you don't know what that is, basically I take $100 and incrementally invest it each week into the stock market. I believe the portfolio is up somewhere around $2,100 or $2,200 right now. So check out those videos if you haven't and you want to follow along with my investment journey. But you can see AbbVie's one. I'm invested in AbbVie. AT&T also invested in them. I got companies like Coca-Cola and Johnson & Johnson both in my portfolio, so it's not like I'm just giving you guys this information and I'm not doing anything to back up what I'm saying. These are real companies that I am investing in because I just believe in the potential here. And I also, if you guys follow my story, kind of my investing in YouTube channel, you know that I read the book The Intelligent Investor, and a lot of these companies I actually was able to take some of the practices from that book specifically and figure out that they were undervalued. And since I've invested in some of them, they've gone up percentages like 15%, and that's just over the past few months. The best part is I'm not necessarily looking for those short-term results. I'm not looking for 15% jumps in about a week or a month or whatever. I'm looking for that steady growth over time. But because I'm doing this research and because I'm reading books like that and basically just setting myself aside from other investors by putting more time and effort in, I'm able to identify a lot more of these stocks that I think are poised and have a lot of growth potential within these specific industries, within these specific lists like the Dividend Aristocrats. So these are definitely my favorite investment resources. My favorite investment group is the Dividend Aristocrats as well. So all of this is just great stuff to me. And just moving forward, guys, make sure that you're making your own decisions with your investments. I can give you what I'm investing in. I just like being transparent with everybody who watches my videos, but don't blindly copy what I'm doing. I have had some great results so far, but that's not saying that it won't change in the near future. It could change tomorrow and I could be negative on all my investments, but I don't see that happening for a long time. So just keep that in mind. You always want to be making your own investments. Anyways, guys, that's all I really have for you today. You'll probably see me investing in this ETF in my next video for my Robinhood challenge, so definitely stay tuned for that. And if you guys have any questions about Dividend Aristocrats, investing in general, or you just want to strike up a conversation, then make sure that you comment down below. You can go ahead and follow one of my social accounts. So I'm on Instagram and Twitter. Both are at DLitzTV. So check those out if you want to be in touch with me. And thanks for watching this video, guys. I hope you all have a great day.